The couple of reasons for that. One is the issues that the world has seen in crypto world, where you've had lapses in governance structures within the organizations that were predominantly the primary players in those markets. And secondly, some of the secondary markets are beginning to show interest, as well as the primary issuance markets around traditional securities that want to go on chain and realize the benefit of tokenized securities. Those two things have raised quite a bit of interest from the clients, and they're looking for traditional players who actually have been playing in this market for decades and provide solutions where they can. The regulators that are principles-based regulators are finding it a little bit easier to live with digital assets at this stage because it's not deeply codified in the rules how to deal with a technical part within a security or an asset. Whereas jurisdictions like North America and other countries where it's more prescriptive, it's a challenge because the behavior of the security dictates how deeply the rules go. So for example, UK will find it slightly easier to deal with the rules or the rulemaking around these assets, whereas places like North America will find it a little bit more challenging. They will get there, but it will take time for them to get to a point where the rules are consistent across all the states and at the federal level. What that basically means is that it's not a race. It's basically everyone's running at their own tortoise pace, right? So no one's going to win it one way or another because each market is quite unique. Each market has its own nuances. When we look at what's happening in North America versus Asia, Middle East, and the European Union, each one has their own flavor on how to deal with these assets or activity. We will get there, but what we have to be cognizant about is that there is no opposing forces when it comes to regulation on these things, so that the real benefit of tokenized securities, that is cross-border trading, cross-border transportability, does not get lost. Practically speaking, at this stage, as an organization, we are experimenting across various asset classes. We have already done a bunch of POCs or experiments over the past 3 years, tokenizing different kind of instruments, traditional instruments. Very recently, the trade finance team have done tokenized trade finance mobility on-chain, and it has various benefits. It's very well known what that can do in terms of collateral movement, in terms of settlement finality, the speed with which the asset can move, and how accurate these things can be based on reporting. The other main opportunity for us, other than a singular product type, is a general efficiency gain and potential liquidity increase in the market, where instruments are on secondary markets. Unfortunately, the markets are not there yet. We are waiting for the winners, but we want to be there when the secondary markets are operating. For us, the main thing is that we pick the right technology vendor, we pick the right ecosystem to connect to, which becomes ubiquitous across the industry. It remains a challenge. Today, we operate in a market which is highly siloed. For example, we're sitting at Sybos here, Swift versus API, constantly having these conversations, but nevertheless, the market works. So we want to make sure that when blockchain and DLT are implemented across these things, it is the same. Of course, there'll be challenges, but at least we will start to realize the benefit of blockchain more appropriately than waiting and seeing whether a secondary market comes. But we need to put those motion wheels now, as soon as possible.